Today, we want to address how investment decisions and financial instruments are key levers in decarbonisation, to follow the money. Our panel is going to discuss how to direct funds where needed to ensure decarbonisation happens at the scale and within the time frame needed to protect future generations. We have with us today a panel of experts in finance and investment in the sustainability sector. All the way through the Decarbonisation Summit, we want you, our audience, to pose us the tricky questions needed. So do use the live stream chat box to take this opportunity to ask our panel those questions. So now I would like to introduce our panel speakers. Alice Bordini Staden, Investment Committee Member and Stewardship Lead at the National Trust. Mark Hannigan, Partner at Greenbackers Investment Capital, a climate tech funding advisory, who are catalysing the investment needed to build a more sustainable society. Joining us online, Robert Wigley, Chair of UK Finance, a pioneer of sustainable investing, spearheading the finance sector into the new age of trading and investment. And Will Smith, a sustainability entrepreneur and co-founder of Tread, a unique and rapidly growing business which helps consumers to understand the real impact of their financial decisions. Thank you all very, very much indeed for joining us here at the inaugural Decarbonisation Summit. The format of the summit is a Q&A with our panel speakers and between our speakers. So let's begin by asking you a little bit about what your own organisations are doing to decarbonise. Alice, maybe you could give us that question from a National Trust perspective, a quick understanding of what the National Trust is doing, please.
Absolutely, and it's a pleasure to be here. The National Trust is the largest European conservation organisation, and it looks after parks and natural capital and historic buildings. We have a net zero 2030 target, so we are very, very ambitious in decarbonising our operations, our investments, and investing in positive climate solutions. So from our built environment, which is the historic houses, that is one of the challenges that we have, because as you will know, it's remarkably difficult to climate-proof historic houses where you have so many limitations in what you can do. To also the land that we have rented out to farmers. Those are in some cases a source of emissions, in particular methane. But we do have a plan that goes across all the sources of emissions that we have, and the strategy to decarbonise it depending on where they are across the three scopes for 2030. We are, of course, planting a lot of trees. We look after an extraordinary amount of land in the country, but we are planting more trees. We are investing in restoration of peatland and rewilding, and also for more on my side, the endowment side. We do have an endowment that supports the organisation financially. That is obviously very challenging because the most progressive part of the market is shooting for 2050 for net zero, where we want to get there 20 years before then. And so that is, it goes through a mix of decarbonising the investments, scaling up the climate solutions, and engage.
Very good. I think with an organisation with the huge scope of work of the National Trust, it's probably tricky to ask you to briefly summarise what you're doing to decarbonise, isn't it? But thank you for that quick tour through. Will, may I ask you at Tread to give a very quick introduction into your work and how you're helping to decarbonise?
Yeah, sure. So I think we're at the opposite end of the spectrum, which is we're a brand new business. We've been going just over a year. And so actually our ambition is to start off from that net zero position. And so as we grow with scaling, it's so important that us internally as a tech provider can hit that net zero. The other thing is that actually we as a financial institution have a much bigger sort of leverage, as it were, because we have customers, and ensuring that they can also hit that net zero is super important for us. And so we're trying to give people and empower just normal people what's the impact of their spending. And so once you have that, it's actually a much greater tool, and it's much more impactful for not only us as a business, but we can empower everyone else to be net zero as well.
Thank you very much. Robert, I'll hand over to you virtually now. I know you have your finger in many financial pies, Robert, so a quick understanding of your work and how that helps to decarbonise the economy, please.
So, just for the benefit of your viewers, UK Finance is the trade association that looks after the financial services sector in the UK. We have 250 members, amongst which are banks, building societies, credit card companies, payment systems, and asset-backed lenders. So we work very closely with the Grantham Institute to produce a report recently called A Just Transition, Financing a Just Transition. You can't have a transition without the financial services sector being centrally involved in facilitating it. But we believe that transition needs to be not just successful, but just, meaning it's across all the regions in the UK. That's our focus. So it's about encouraging our member institutions to participate not only in the Glasgow Financial Alliance for Net Zero, but ultimately in the Net Zero Banking Alliance. And I know we're going to come back to that, so I won't talk about it now. So it's about motivating and coordinating our members in terms of their contribution to a just transition.
Thank you very much indeed, Robert. And Mark, lastly, from a Greenbackers perspective, what's the work that you're doing in this sector, please?
So Greenbackers works internationally, and we live in the nexus between grassroots clean tech innovation and capital markets. And what that means is we help clean tech innovators like Will find sources of capital for seed and Series A stage investment, and we help capital allocators who are trying to commit more capital to early stage clean tech to ventures that meet their investment criteria. The reason we exist is that early stage clean techs like Will's business have to overcome the valley of death, the chicken and egg of don't have any orders, need some funding, don't have any funding, need some orders, early stage. And the way that we help capital markets is what's going on right now is there's a flood of capital wanting to get into ESG-focused sustainable assets, but the plumbing of the financial services industry is trying to catch up to allow that capital to be deployed at the grassroots in an early stage. A lot of that infrastructure just isn't there yet, and we believe we're helping accelerate the connection and the flow of the capital.
Very good. I'd like to come on maybe a little later to look at how perhaps you could work together to further your own decarbonisation objectives. But let's move on to some of the big questions coming out of COP from the first week. So last week, 450 financial institutions with assets of a whopping $130 trillion pledged to go green. Do you think that is going far enough, and do you think it's targeted in the right area? Mark, I think you're quite optimistic about these flows of capital.
Yeah, I would answer that question in two parts. Firstly, I am very optimistic, and we talked offline, Aid, that I think the fundamental battle, if you want to call it that, has been won, where the wheels are in motion now, where capital markets are behind achieving net zero. We can debate whether it's happening fast enough or not. The commitments at COP are impressive, but I live at the grassroots early stage, the kind of, if you like, the feeder of the Teslas of tomorrow all started as small ventures at someone's kitchen table. And from Greenbackers' perspective, not enough capital is reaching the grassroots. We're seeing impressive numbers going to large scale, grid scale, big infrastructure projects, but there's simply not enough capital flowing to early stage ventures yet. We need grassroots innovation to feed up, and we're making progress, but we need more capital getting injected earlier, as I'm sure Will would sympathise.
Yeah, Will, I was going to ask you, Will, what's your take on that question from a startup perspective?
From a startup perspective, I think the ambition, like you said, the ambition to do the right thing, I think all the wheels are set in motion. I think the really difficult thing is what is going green. And so from an early stage startup position, it's where do you deploy that capital? Is it this business? Is it that business? It's actually really difficult to understand the impact of that investment. So should we be investing in this first early stage company or the next? And I think that has to be the next sort of level of detail that people go into. It's how are you deciding where we should be deploying capital? And that's a really difficult question to answer, especially at the concept stage. It's what is the impact of this going to be, and where should we deploy capital efficiently? So I think it's a really good starting point, but there's the next level of detail, which is where should that be deployed?
If I may, I would add to that what's been pleasing for me at COP is to see the level of focus on capital being deployed in what's called the hard-to-abate sectors, like steel and concrete manufacturing. I think that's very encouraging. We've made massive strides in power gen. Here we are at SSE. We've made massive strides in vehicle transportation, but if you do the Pareto of where the emissions come from, there are some real tough nuts to crack in there, and I think it's encouraging to see a lot of the messaging out of COP focused on the hard-to-abate areas.
So, Alice, I think it's difficult to describe the National Trust as a startup, quite the reverse. So what do you see in this area?
Yeah, so I wanted to say two things about this. What Will Markham say is very, very true, and in fact, it's unfair that there is no more capital that is chasing venture capital and startup. But that is because the way I see it is because of this massive QE that we had in the market that has just flooded the system with money and it just driven up the returns of all financial investments. And frankly, when you can make so much money investing in listed equity or big private equity investments, then investors are less incentivized to take the additional risk of investing in venture capital, where we know, broadly speaking, 1 out of 10 is going to make it, the other 9 are going to blow up. And so it's the required return for investing in venture capital is obviously higher because it's got to compensate for the risk. But because of this distortion in the market driven by this monetary stimulus that continues to go on, I absolutely hear what you two are saying, and I see it. But from an institutional investor's perspective, they say, well, I can make so much by investing in pretty safe businesses listed on, in the stock exchange or large private equity businesses. So that is definitely a concern.
Can I? Sorry, go on.
Yeah, no.
Mark, let's allow Robert a moment here. So, Robert, you see some of these large flows of capital in your work. Do you see an event like COP26 creating a culture of confidence, de-risking investments in these spaces? What's your take on that?
A really important stimulus to activity, I think. But interestingly, as a trade association, sometimes we have to encourage our members and lead our members to do things. On other occasions, we're almost struggling to keep up with the rapidity with which they're adopting a new way of doing things. And I would say that's the case here. So if you just look at the progress on the two key areas, if you look at the umbrella Glasgow Financial Alliance for Net Zero, it was launched on the 21st of April, the day before President Biden's Leaders Summit on climate. And at that point, it only had 160 firms and 70 trillion. Already now 450 firms and 130 trillion. If you look at the Net Zero Banking Alliance, which sits within GFANZ, again, on the 21st of April, 43 banks from 23 countries. I think at the last count, there were 94 banks from 39 countries with about 66 trillion of assets, and that's something like 43% of global banking assets. So I can tell you there is no lack of enthusiasm within the finance sector for supporting this crucial initiative. And just in the UK, we are genuinely world leaders. The 8 largest lenders in the UK all signed up, about 30 more of our 250 members and growing by the minute. And as an institution ourselves, we've signed up as a supporting institute. Now, of course, does that go far enough? No, we need to see action. The acid test is how this actually delivers over time. But I can tell you, from my conversations with chief executives of banks and other lending institutions, there is massive commitment to this agenda. And I'm sure that events like this do help push people along the spectrum.
So I know both you and Mark are very optimistic. And these are some impressive numbers. I think really there's only one number that counts, isn't there? And that's the number around greenhouse gas emissions. So, Robert, does your optimism stretch to thinking that we will solve this problem, that we will decarbonise?
Depends how you define decarbonise, but I am optimistic. I am optimistic because I don't think we have any choice, and I think that's becoming increasingly apparent to everyone, even those who are reticent to sign up. So yes, I am confident.
Alice,
I'd like to come in on that, and it's very we at the National Trust, we are part of the GFANZ, we are part of the Race to Zero, we are very enthusiastic members of all of these initiatives. However, being also part of some investors associations such as Climate Action 100+ and the IGCC, being engaged with a number of corporates through our stewardship activities, I can say signing up to these initiatives is good, but that doesn't guarantee anything because, you know, all members have 12 to 18 months, depending on which of the sub-initiatives, to come up with a plan. And frankly, there is, unless there is a business plan that delivers and there is an accountability mechanism that guarantees that firms, you know, other investors or banks or insurance companies signing up to this agreement are actually delivering on the commitments, then, you know, that those are just words. So it's a great first step, and I am being part of the financial services industry. We can see that we've been driving the market. You know, the regulators are catching up with what we're doing and how we've been pushing companies to commit. that has been the result of engagement rather than regulatory pressure. So we can only be optimistic and enthusiastic about this success. But is it enough? And I don't know. We've got to see far more.
I think if I may interject, Scott, I don't think it's just about either regulatory engagement or indeed engagement with the finance sector. It's what the public want. It's what our customers want, and ultimately that is what is going to drive people to move forward here faster.
Well, perhaps having an organisation like the National Trust involved is key to that. I mean, the word there is trust, isn't it? And people have an enormous sense of trust in the National Trust. And if you're taking your audience on that journey, that does help to go a long way to bringing people along on the journey, doesn't it?
Absolutely. Having 6 million members and then carrying them with us and is very important. And we do listen to our members. And, you know, some of the initiatives that we had in the past were driven by our membership and it's and to the wider public. We're there to serve not just our members, but the wider public.
But
very good.
I do think it's a really interesting point there, because, you know, every single person buys products and services, and companies always service that need. So there's always the debate of, should companies be driving this? Should it be government? Should it be individuals? All of them have to work together, but ultimately products and services are built because customers buy them.
Yep.
And so that's kind of what TRED is trying to educate people on. What's the impact of their spending? Is it this vendor, that vendor, etc.? But actually, I think that's one of the major blockers, which is where should people be buying things. As soon as consumer habits change, that then that makes and forces businesses, products and services to then make that investment to change how that is. It all kind of stems from that consumer and what they're wanting to buy and where they're willing to buy it from. Very good.
Well, there's a great sense of optimism there. I've heard the expression "coptimism" defining the first week of COP26, so great to begin the Decarbonisation Summit with that air of positivity. So thanks very much for that. Moving on then to a slightly more tricky question, looking at the responsibility of investments. Should institutions and investors be held responsible for the carbon footprint of their investments? Mark, what would you say on that one?
Should investors be held responsible?
We're here to ask the tricky questions.
Ultimately, yes. I will answer that question, but I'm going to link it to what Will said a second ago and actually what everyone said. So I have a slightly contrarian view where I think there's a perception that the captains of industry and the capital markets are in control here and will decide just how far down the net zero path we go, and that citizens and consumers will either receive the net zero society they want or they won't. I have a completely contrarian view. I think consumers and citizens are driving this agenda. I think it's going to happen. I think that consumers and citizens have 3 massive levers. Every single person that's listening to this webcast has 3 massive levers they can pull today in terms of the consumer choices that they're making, who they vote for at the ballot box, and where their pension is invested. That's what capital markets and captains of industry are watching for, because that's where the profits of the future are going to lie. So I actually think this is a society is in the driving seat more than they understand in this process.
It's difficult to run a successful business if you're out of sync with your consumer base, isn't it? But Robert, I could see you nodding vigorously there. Do you think responsibility lies with consumers, or do you think that responsibility should be held at another level with maybe government intervention? What's your sense of that?
So I completely agree that the consumers are ultimately driving this, and they do have the levers that were just identified. But I think the key here is transparency. I mean, if you think back to a sort of previous version of all this, which was corporate social responsibility, we created the Corporate Social Responsibility Index in business and the community so that we could measure when a firm said it was going to undertake CSR activities, did it really do it? Or was it just purpose washing? And here, I think that the same issue applies. If people are going to make commitments, then they need to be held accountable. For that, you need transparency. You need transparency in terms of their specific position as a firm, the commitments they've made, and whether they've achieved them so that they can be held accountable. So I think that's the issue. It's all about transparency, which is why we've now got this, we're working on this framework for disclosure.
Alice?
I absolutely agree that Mark correctly identified the three elements. There's society, there's the policymakers, and then there are financial markets, so investors. However, I think that who's really driving on the societal front, the decarbonization, is young people. Well, young people don't have any monetary power. And this is where the disconnect with the pension funds come, and you you still have a lot of debate on whether this decarbonization is necessary from all the people and people that just want to make money with their investments. So this is where I think you need responsibly minded investment managers that they invest capital for the very long term, and so they can properly account for climate risk beyond what their immediate clients want. And then you need policymakers that drive it forward. But people have a massive role in pushing policy. And Obama yesterday made the point, you're not too pure for politics. If you don't push policymakers ultimately, and we see it in this country and in other countries where the people there actually turn up at the ballot box and go and vote. And if you plot them by age groups, you tend to see that older people they tend to go and vote more than perhaps younger people that sometimes are disenfranchised. But in this case, it's younger people that really have to turn up at the ballot box and express with their vote their preference on the direction of the country. Yeah,
Will, what's your take on that?
So should investors be held responsible for their investments and the amount of carbon it emits? No. Should they hold companies responsible for that? Yes, absolutely. As people that invest and push capital into, ultimately, I don't think it should be them that is held responsible for it. However, it's the leadership of those businesses that they're investing in that they should be really pushing them. Everyone always talks about time, cost, quality as a triangle, and that's all well and good, and people have a perception of what speed is, speed to market, etc. Mm-hmm. There should be a fourth box that people start thinking about, which is more and more is sustainability. And so when people are making purchasing decisions, it should become a major driving factor in decisions that people are making.
That's happening well.
Yeah,
that's happening. A quick point on accountability, because I don't think I answered the question fully. But to hark back to the point about CSR, which was kind of the previous iteration, as my fellow panelists said, what I think is different this time in terms of holding people accountable is that companies are no longer in control of their brand because of social media. We didn't have social media before. So your brand is owned by the people who consume your products and services on social media. So I think there were attempts to fudge the CSR back in the day. I think it's a lot harder to do now in the era of social media. I think there's a lot more accountability because of that.
Mm. Alice, I think
maybe I can just pick up on one of the points the previous speaker made. I think the comment was something along the lines of young people don't have spending power. That's actually not right. In the book I've just written about Generation Z, I think today Generation Z's proportion of digital wallet spending is something like 40% and forecast to be more than half within 10 years. So they absolutely have spending power. And it's the captains of industry and people running big businesses and banks who are looking at the future digital wallet and saying, who's going to drive that? And who's thinking, do we need to be in line with if we're going to have a business in the future? That is one of the reasons they're so focused on this agenda.
Before we move on to our next question, Alice, you've got a final
No,
word.
that is very true. I was thinking about financial investments and younger people and Gen Z, but also the millennials don't really have much in
Pension
terms of
versus consumer spending, yeah.
absolutely. Whether this is going to change in the next 20 years, totally, because then these people will start having more meaningful financial investments. But I do think that investors and savers investors on behalf of their customers, and so the savers do have responsibility on emissions, because frankly that is the whole principle of stewardship. You have to know what you invest in, and you have to manage those investments in the best interests of your clients and your beneficiaries. And so if they don't have responsibility, who does? They are the owners of ultimately of those businesses.
Thank you very much indeed. So to change gear slightly now, a question, our first question from our online audience, and it's at the nation-state level. And the question is, how do governments strike a balance between their countries being attractive for investment and taking a more drastic, immediate action to combat climate change? Alice, would you like to have a go on that one first?
Yeah, it's so we're talking about decarbonization and the climate challenge as all risk. Yes, of course, it's a risk, but it's the biggest opportunity that we'll have in our generation. It's well, we can call it the fourth industrial revolution. So it's not just about certain industries and certain processes that have to decarbonize real fast and real deep. But it's also about scaling up all of the new low carbon industries. So it's the government and policymakers in general have a very, very key role in facilitating this transition with the right regulatory framework, fiscal framework, and by providing the first initial capital that gives, in a way, like the proof of concept. So it does de-risk the investments for private capital. Nobody is under any doubt that ultimately the transition is going to be funded by private capital. There just isn't enough public capital around. But the role of public capital is the one to de-risk it. So, you just invest your first chunk, and perhaps on a first loss basis or concessionary capital or whatever it is, so that you can start the process, and then private capital will take courage and will follow. So it's absolutely important that public capital is spent properly to get it in motion, but ultimately it'll be private capital, and it's a fantastic opportunity for investors.
You're continuing the theme of optimism, but perhaps our online audience needs to come and catch the Coptimism bug here in Glasgow to start feeling that positive energy. Mark, your sense of that?
Yeah, a couple of comments on the question. Great question. From my perspective, it is a tricky balance, because at a nation-state level, you have to think about energy security. You have to think about employment and a just transition. We can't just rush blindly to net zero. You've got to balance those things. You're also competing for FDI, foreign direct investment. Okay, we're in the post-globalization era, but countries are still competing for investment. And I actually think that, slightly, again, contrarian view, but the Europe, the UK, US, the places that I operate, I think government is doing a reasonable job of de-risking investment with grant funding programs for clean tech innovation. I mean, it's probably quite unfashionable to applaud government in that regard, but at the grassroots level, I actually see them doing a reasonable job of stimulating investment, de-risking, and then turning to private capital markets to say, okay, Series A, you guys, you're up, let's go. So just some thoughts on the question.
Yeah, I mean, you're right. I mean, I do a lot of work in the e-mobility sector, and the UK government has obviously made a big statement on banning combustion engine vehicles, pure combustion engine vehicles by 2030, and that's really energized and de-risked that sector. Robert, can I bring you on that question, the nation-state question?
Well, just to broaden it out a little bit, I think there are many reasons that investors invest in a country which go beyond the specifics around green finance, and therefore what we need to do is make sure our overall investing environment remains attractive. That means keeping our excellent legal system, which is seen to be fair and just around the world, making sure that we're competitive from a tax perspective internationally, and the whole range of kind of infrastructure support that we give to our investors globally. So it's these factors actually which drive as much investment as the specifics around green finance. I mean, we need to focus on the investing context and our international benchmarking.
Very good. Drawing some of these strands together, looking at the government intervention side and looking at the investment risk profile and looking at companies that may fail. My next question is to look at that. Much of the answer to decarbonisation lies in new technologies, and according to the government's Department for Business, Energy and Industrial Strategy's 10-point plan, innovation and development is high risk and many will fail. So how do we encourage investors to look at that risk profile and invest in the companies that will end up being the game changers? Will, would you like to take that one?
Yeah, sure. So I think sort of there is, because the UK has been sort of quite forefront in its investment in new technologies, think of wind. It started a while ago. I think there is risk profiles for every single type of investor. I think sort of touching on the last question as well, it's, if you want a sort of tried, tested method, great, we have a load of wind turbines, we have amazing solar panels, etc. If you look at the early stage, and then sort of tying on to this question is, there are fantastic schemes available for young startups like ourselves. So specifically, there's the EIS and SEIS scheme, giving people tax breaks for, if the investment doesn't go as well as it does. It gives them rewards or, it gives them ability to handle some of those losses as well. I think there could be more schemes like that specifically for people in clean tech? Yes, absolutely. And so then that takes the risk out of it. So there's the reward for people if the businesses go well. Yeah. But then actually, if they don't go, then the risk is held by other parties. So it's almost like funded by private capital, but it's de-risked by central governments.
So the National Trust is obviously a huge organisation, Europe's largest membership organisation. Do you find yourselves investing in some companies that are delivering decarbonisation, perhaps have an element of risk to them in your work?
Yeah, no, absolutely. That is one of the three pillars that we're going through with the endowment. We have decarbonisation is obviously the biggest chunk, and we should be under no illusion. I hear a lot of people saying, well, it's tech is the solution to this problem. Well, the science is very clear that 90% of the heavy lifting is decarbonisation. And tech can come in and with some carbon removal technologies or some other yet unproven technologies for the hard-to-abate sectors, we can try to resolve the remaining 10%. But it is very dangerous to just rely on tech to have the answer to all problems. We do have to go through decarbonization, and it is going to be hard in some sectors more than others, and it will lead to job losses and a lot of stranded assets. There are still people debating on whether the fossil fuel reserves that we have and they're currently being booked in financial in the financial accounts of oil and gas companies can be taken out of the ground. Well, no, the science says that they should actually, we have enough oil, there shouldn't be any more exploration. And so it's decarbonization has to be the main chunk, but scaling up climate solutions, so investing in all sorts of new industries that we're going to need, including tech, is a big part, and we are ramping it up, and we will do more and more, and that goes across from both young businesses, so venture capital and private equity, all the way to more mature businesses. But there is no doubt that the majority of them are in the private space, and that is a big role of financial markets, and this 130 trillion, a lot of it has been is looking to go into these private investments that will be the technologies of the future.
Mark, this question is very much in your centre of expertise. What's your take on this?
Yeah, very much so. We live and breathe, for every 10 ventures that we agree to work with, we decline to work with 100 because they're not investable. And we wouldn't bring them to institutional investors. So a couple of quick comments on the question. First one is, it's really helpful to have a few clean tech unicorns, and Tesla's $1 trillion market cap is very, very helpful in convincing capital markets that you can make money in this space. Pre-Tesla, I don't know that we had many poster child clean tech ventures to point to as case studies, but that's coming now. And back to my original point, I think helping the innovative community build better, more investable businesses through education will help. And I think the role of incubators and accelerators and universities to help, if we're talking specifically UK in this case, we can do a better job there helping entrepreneurs build businesses that are more investable and how to articulate their value proposition to be more investable. You know, there's a lot of hard-working entrepreneurs out there with great ideas, but that's not the same thing as an investable business. And I think we've got a kind of cultural journey to go on there.
Marketing communications, I think, is a crucial piece in the storytelling of exciting new businesses, isn't it? So, yeah, absolutely. Robert, a final take from you on that question, please.
Well, very briefly, so to answer it in two parts. Firstly, yes, of course, technology.
I think we've perhaps lost Robert.
The later period of the technology is going to be relevant because these technologies are relatively nascent. Can you hear me now?
Yeah, Robert, we lost you for a second there, but you're back, so please do fire away. If you could start again, please, that would be great.
Of course. I was going to say in two parts. Firstly, I think technology is important. So the work that we did when I chaired the Green Investment Bank Commission, looking at all the ways in which government can encourage investments in new technologies which would not be investable without government support, and sometimes which are going to have very long period returns and therefore need patient capital, is crucial. So that's the first part. As far as my sector is concerned, I think our impact is probably at the front end. It's helping large corporations who maybe today are more involved with fossil fuels make the transition. In the SME space, it's probably about building retrofits and energy sourcing, and that's and providing expertise to the SME sector who don't have the resources that larger corporates have to focus on this issue. And that's one of the reasons we formed a recent partnership with the CBI just a fortnight ago, actually giving guidance on how SMEs can get involved in reducing carbon emissions and looking at the ways in which they can green their businesses.
Very good. Thanks so much indeed. Let's change gear again and look at inclusivity. I mean, when we're investing in a green economy, how do we do that, ensuring that no one is left behind? Again, maybe Alice, you have perhaps the largest audience in your network. How do you do that at the National Trust?
So the concept of a just transition is one of the pillars of the decarbonisation process, and there is a very big role for both the public sector and the private sector to ensure that nobody's left behind. Now, there is no question that neither the public sector nor the private sector alone can solve this. It's got to be a partnership. Right? So there will be industries that will have to transition, and specifically in fossil fuels, there will be job losses. There is no question that, for example, the workforce that is currently employed in the coal industry, either mining or coal-fired power sector, well, those jobs will be lost. Unless those power stations get converted, but only the minority will be converted. So there is a role there to retrain this workforce in a partnership between the public and the private sector, because there will be an extraordinary number of jobs that will be needed in the new sectors, and so that is very important. But it's the fact that we have to transition and the difficulties of ensuring that nobody's left behind are not an excuse to delay action. So, we know, for example, in countries such as Germany, where a quarter of their electricity generation comes from coal, the issue of what you do with the workforce is one of the big stumbling blocks at a faster decarbonisation, faster phasing out of those coal plants. But ultimately, we have no choice. We have to decarbonise, we have to cut our emissions, and therefore, both the public and the private sector are going to have to provide the money and the resources to retrain the workforce and make them employable in other sectors.
Thank you, Alice. Robert, how do we bring everyone on this journey?
Well, I think the just transition, which I told you we'd written a big report on with Grantham, is right at the heart of the way the banking sector wants to do this. This has got to apply across the regions and to all elements of society. And that's really about planning and thinking about regional and local community impacts and undertaking projects with local communities. And I think it's a crucial part of that is housing. We obviously, through our mortgage business, have a massive role in the housing market. And just thinking through how to decarbonise housing is one thing that we can perhaps do better than anybody. And of course, by its very nature, that is incredibly distributed and right across the country. So I think those are the key points for us.
I have a couple of observations on that question, Aid. So on diversity and inclusion, first, and I'm speaking from the perspective of the people who are allocating the capital and the ventures who are seeking to receive the capital. It's a huge problem, I would say. It's almost embarrassing. I think we have a lot of work to do to have an ecosystem that reflects the society that we serve. And I see week in, week out, but the good news is, let me lighten it. Week in, week out, I see investment funds pausing for thought when thinking about investing in ventures that don't exhibit a meaningful level of diversity and inclusion. That's a very real reason not to invest these days. So it is an issue, and if I would encourage entrepreneurs from minority groups to, the door is open. You don't see this as a barrier. Invent, push, move forward. So I think it's an embarrassingly huge problem when you visit Wall Street and the city, but real change is afoot, not just platitudes. Where capital is being allocated and not. This is a serious bullet on the scorecard at investment committee decisions.
Will, your take on this?
So further to your point of retraining and making sure everyone actually has the ability to progress. I think nothing lights a fire quite like people thinking they are going to miss out, though. And so it's do we want people to feel like that? Actually, that helps us transition quicker. FOMO. The power of FOMO. And so as soon as a couple of people think that they're going to be missing out, everyone then transitions. I guess that, like, COVID's a great example of, people had to transition very, very quickly, and it was amazing. People rallied around it. Remote working was a thing. Everyone is on Zoom calls and everything like that. So I do think there's kind of two things, which is, one, we need to make sure that we have the backing, the right infrastructure to help retrain and make sure that people can go on that journey. But nothing helps stuff transition across like a bit of FOMO.
I think that's probably happening in the electric car space. I get a sense that the Osborne effect has kicked in. People thinking, I'm not going to buy yesterday's technology, I'm going to go for an electric car.
And I think that's a really good example of how industry, individuals and government can all work together. So you look at electric cars, there's someone that is the poster child, the Teslas of the world. Everyone then goes, wow, they've done amazing things. I'm not going to miss out on that opportunity. Governments have then stepped in and said, actually, we're going to stop selling diesel cars by 2030. Consumers are then like, well, actually, I can see how I can own an electric car with all of the infrastructure. And suddenly, you've got the recipe for a booming industry and a huge transition.
And if I may add, so I agree with all of that, but I always make the point when we talk about Tesla, that's all true, but it's an exceptionally good product. So you still have to win in the marketplace with an exceptionally good product or service.
It is an exceptionally good product, but to come back to the question and to look at inclusivity, it's still an exceptionally expensive product, as is battery storage, as is solar power, as is a heat pump. So if we're looking at that inclusivity piece, and looking at the speed of change required for consumers to take this stuff up to decarbonise, the central question of the decarbonisation summit, how does that work? I don't see an answer to that question. Alice, do you have an answer to that question?
Well, specifically for the built environment or generally?
Well, just in terms of consumers taking up these technologies, which do cost an awful lot of money for a lot of people.
Look, I think in reality, consumers, there is the curve that describes the attitude of consumers with new technologies. You have the early adopters, you have the ones who want to see it proven, and all the way to the late adopters. In truth now, until we have for example, for EVs, a charging infrastructure across the country that gives people confidence so that they're going to be able to recharge. You're going to have some people that obviously they buy it because they have a plug at home and they just use it in the city. But there is a big role, and we're gonna have to see more from the government to help this, because
I mean, it's that trade-off between the speed required to decarbonise and the cost to institute these. I mean, at the National Trust, the cost of installing solar, battery storage, electric vehicle charging, I mean, that's a problem for you guys, right, as it is for consumers. So it's that question of the speed to deliver these initiatives, I think.
Yeah, no, well, absolutely, and we are, I can talk for what we do. We're almost self-sufficient from an energy perspective, but we were able to have our own, renewable infrastructure on our land, and we buy renewable electricity. I mean, funnily enough, for us, one of the biggest sources of emissions in Scope 3 is actually the emissions of vehicles, of people visiting our properties, and that's really hard one to resolve, because most of our properties are almost by definition away from city centres, and so we need more public transport so that people don't feel they have to drive, otherwise they can't visit us. So we can pick them up as we do with shuttles from a train station, but the majority of people still want to drive. And so how do you encourage that? Well, maybe having some EV charging stations on our car parks is a way to do it. But of course, the infrastructure is not there yet, and the built environment, it's like, if it's going to cost 10 grand.
It's there, but it costs a lot of money. Mark, you want to
I have a real life example of this question. So I do think, the cost issue in society, I do think electric vehicles are a little bit of a middle class shiny toy, a little bit in Europe right now, also in North America. But so in the US, an interesting experiment is happening right now where the go-to pickup truck of, if there is such a thing, the average blue-collar guy or lady in the US is the Ford F-150's best-selling vehicle in North America. It's not a middle-class person's vehicle. They've brought out an all-electric F-150. You might have seen President Biden with his signature aviators on, wheel spinning down the airport runway on it. So the uptake of that product, which is at a more competitive person in the street price point, will be a very interesting experiment to watch, and the knock-on effect for Europe. I just thought it was meaningful to highlight a real-life example.
I do think it's interesting. So us as an early-stage business, I always say it's one of our biggest challenges is how do you compete with big companies on a cost basis, right? It is more expensive producing a sustainable product. As people invest more and more, the price comes down. It's like early adopters of solar panels. They're expensive. As time goes on, more people adopt them. The price comes down as the investment. But this goes back to the question of who bears the brunt of that cost. Is it the individual buying the products and services, which is what Tesla did? They brought out a very, very expensive roadster aimed at high net worth individuals. Is that the right way to go? Is it through government funding? And so that's the big question is like, who bears the cost? At the moment, for us, we are as a business. And so again, it poses different challenges, which is how do you then make that into a sustainable long-term business?
Yeah, very good. Coming on to another question from our audience then. We've touched on a lot of these points, but there's a sense in which there's a new industrial revolution, a green industrial revolution. We've talked about optimism. We've talked about the flows of capital. Do you see this all building up to something that we can call a new industrial revolution, a clean industrial revolution?
Absolutely, if I may. So I left engineering college in the UK in 95 with a mechanical engineering degree, and career options were pretty limited, to be honest. Work for one of the big utilities, work in the automotive industry, work offshore in oil and gas. That was really it, and it was dominated by huge corporations. When I speak to students now and graduates, I'm always saying, you are so lucky. The level of innovation that's happening in the economy right now, and it's not all big corporations. You can get in on the ground floor of something small and make a difference. Absolutely. I think this could become a halcyon period for industrial. It is a halcyon period
So it's a green revolution and a democratized revolution in terms of smaller scale companies. Will, I think it's probably right to bring you in at this stage.
Yeah, I think there's so much opportunity available, is that as people start buying more sustainable products or more or greener products, I do think there's every part or every facet of people's lives, whether it is transport, it's energy, it's clothing, it's groceries, every single part of your life needs to be transitioned to net zero. And so if you think about where we are right now and where we need to be, I think pretty much every single industry that you could think of needs to have some kind of revolution, some kind of disruption. From our perspective, we're hoping it's the early stages that win, really selfishly for us. But actually, you need the big businesses to then transition across. And I think what we're hoping to do is, we've seen partnerships, NatWest are doing amazing things. But actually, we, as the younger innovators, can then hopefully bring kicking and screaming, or whether it's actually out of pure, wanting, actually transitions them across as well. And I think that's really the revolution that comes in.
I think we've just lost Robert. We'll come back to him in a second. Alice, a green industrial revolution.
Recording in progress.
Are we experiencing a green industrial revolution?
We are, for sure. But I think that it's the bigger problem that we have is that the older economy is struggling to recognize that they have to transition, and unfortunately that there are sectors that will have to change, and they have to change now very, very fast. And technology is not the answer to everything. We still have to transition out of fossil fuels. And when I hear fossil fuel companies, they say that they think they can still extract a gas into the second half of the century because they think they're gonna carbon capture and store that carbon. Well, that's not what the science says. That gas, you should just leave it where it is at some point, and electrifying the the power system is, in a way, is almost the easiest thing we have to do in this process. And so it's quite difficult to get the right kind of speed applied to the old economy now. That is where I'm focusing more rather than.
It is a really interesting point, though, isn't it? It's, if you go too quickly, industries get left behind, people start losing jobs. It then is how quickly do you transfer everything across, and it's such a difficult balance between making sure that we do it quick enough to make sure that we actually have the impact that we need to, but not too quick. So then all these industries, etc., go.
Unfortunately, those industries have a lot of power also from a lobbying perspective with policymakers, and that is something that we're working on. We're working on lobbying practices. We want to know, who are your industry associations and what they say and how much money you're spending as a business, because the corporate interests are obviously, some of them are driving, some of them are holding back this transition. So. It's quite complicated.
Robert, last question to you then on that industrial revolution piece. Do you see this as a green industrial revolution? Robert, can you hear us? Are you okay with that?
I think he said yes.
Whilst we're waiting for Colin to come back.
Digital, the story of the distracted generation. I interviewed 200 young entrepreneurs to do the research for that book, and about half of them, when they came to see me, were not actually promoting business ideas. They were talking to me about what I would call
I think we'll come
half
back
of them related. So I have no doubt we're facing a green revolution.
Robert, we lost you just at the key moment there, with the tantalising point you were coming to. Would you mind just repeating that, please? The businesses that come to see you. Yeah,
I had 200 youngsters came to see me. At least half of them were what I would call social enterprises, and probably half of them were green businesses, or businesses trying to do things in the green space. So I've absolutely no doubt Generation Z is going to lead a transformation and a revolution.
Yeah. Reflecting Mark's point, I think. I'd like to kind of mirror where I started. I asked you to introduce your work. Now we've had this discussion, you know a little bit more about each other's businesses. Do you see in this route to decarbonisation, do you see ideas that could be shared amongst you that could help to further develop decarbonisation? Alice, any ideas you've heard from your fellow panelists here today that inspire you?
Yeah, no, there is definitely need for more investment in venture capital and having companies that help, such as Marx, that help us institutional investors go through all this extraordinary number of young businesses that come to market. Is certainly helpful and absolutely I think Will's business sounds very interesting, and I wish you really best of luck.
Thank you. I think from our perspective, it's great to see both helping young stage companies get financial backing, etc., is a fantastic help, especially for us as the kind of innovators. Also, really nice to see the National Trust. They know exactly where their biggest emissions are. It's from people coming to the car parks. How you then transition that is a very different question. But like every single facet of big businesses, small ones, investment, all trying to help push things forward, I think it's awesome.
Very good. Mark, anything you'd like to add?
Yeah, I mean, some of the books and reports that Robert referenced, the resources, I'll definitely be taking him up on those and some bedtime reading for me. I'll be courting Alice for investment from her endowment for some of our programs, and I'll definitely keep an eye on Will's business, and if there's an opportunity to help, I will.
Robert, anything you've learned today which is inspiring you?
Yeah, look, our sector is all about facilitation. We support the real economy in doing what's necessary to make this transition. So our whole modus operandi is partnership. So I'm very happy. I'm looking forward to meeting Will particularly. I want to hear more about Mark's investment activities. Fascinated to hear that the National Trust is so far advanced in its thinking. So I've learned a lot and looking forward to partnering with all of you to make this happen.
Very good. Well, we're coming to an end to this, the first panel of the inaugural Decarbonisation Summit. So thank you very, very much indeed to all of you for joining us today, to Mark, to Alice, to Will, to you, Robert, and for sharing your insights this morning. I mean, it's clear, isn't it, that finance investment is absolutely pivotal, that governments need to incentivise that journey to the green economy, and individuals need to feel confident in supporting the transition to net zero. So thank you very much indeed to our online audience for your insightful questions, and we'll wrap up this opening panel. Thank you very much indeed.
Perfect. Thank you.
Thank you.